Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 30th of October. I'm Daniel Lam, your host for the podcast. Despite the fact that I did not win any medals at the Asian Games, many friends and colleagues gave me heartwarming and congratulatory messages for participation. But of course, some of the more, should I say, reality-focused people would add that now I have to face the real world. And they're referring to, of course, the shaky sentiment over risky assets in the last few weeks. But there's still winners that we're seeing in such an environment. For example, a number of the household defensive or consumer staple stocks in the US have been doing very well. And of course, on a level 1 macro investing basis, gold. In fact, risk premium, heightened by geopolitical tensions, has been trumping macro headwinds. The upside in gold is likely to have been exacerbated by light positioning and growing short positions before the start of the conflict in the Middle East. Now, gold's price action is following a similar path seen after the invasion of Kuwait in 1991. And from the current path, it may test the all-time high at $2,072. Previous rallies on the back of risk premiums have been short-lived, and it is likely to fade within 30 trading days, unless there were to be a structural shift in the macro outlook that comes from the heightened tension. So what do we mean by structural shift? Well, if the geopolitical tensions were to lead to another inflation surge, which in turn pressurizes the real yield, i.e. the nominal yield minus inflation, then we may see a longer-term rally in gold ahead of us, as gold is typically negatively correlated to real yields. From the flow perspective, we're entering a strong period for consumption. For example, we have the Diwali on the 12th of November, and in China, the local demand has been strong, with gold imports exceeding 100 tons for the 14th time in 16 months. Gold ETF flows have turned positive in the middle of October after a run of net redemptions. And lastly, central banks have remained net buyers year to date. Thus, investors may choose to accumulate some gold for diversification. If there were to be pullbacks to the 1900 to the 1950 area, then it is good to accumulate gold. The longer the conflict in the Middle East, the higher the probability that it may escalate, disrupt the supply on oil, resulting in a more sustained rise in oil prices, and may reignite inflation. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.